Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the technology sector, XLK, Apple, and Facebook. So XLK, we've got 2 days in a row with a higher open and a lower close. The upper Bollinger Band is 53.36, so we continue to close just below it 3 days in a row. That is really dictating where the close does end up being, but it is still a very bullish chart with higher lows and higher highs. Our new low is 53.32, and if we break that higher low pattern, we're going to be looking down at the middle Bollinger Band. The bulls are in full control. As long as this higher low pattern holds, I've got 52.37 and 52.63 as the two levels I'm watching, where the bulls bought the dip, maintaining those higher lows, and the middle Bollinger Band is going to be lining up right around that 52.63 level, and it's currently at 52.64, so we have the middle Bollinger Band support coming first, and that's acting as really the first line of defense for the bulls, with the higher low pattern coming shortly after. So the bulls are still extremely strong. Weekly candlesticks now, we've got 7 green weeks in a row, strong closes, no bearish reversal candlesticks, and the bulls have been in full control in all of 2017 with no slowdown in sight here, and that is why QQQ is the lead market with its higher weight in the technology sector, and that's why these names like Apple and Facebook keep hitting new all-time highs. So Apple, with its all-time high on Thursday, was a bearish doji. Indecision at the top of an uptrend does favor the bears, and we saw that take over there with the bearish day on Friday, and it's a red Maribozu. We did see one of these back on March 2nd, and the bulls were able to recover, but that was the signal of consolidation, as we didn't see much upside in the following 5 days after that candlestick, and we have seen it a couple times. So keep an eye out for a little bit of a further pullback. 139.89 is the low, and the key next support that I'm looking at is the low from earlier in the week. It was off 138.82 and 84. So because 2 days in a row had their lows right at that level, that is an important support level that I'm going to be keeping an eye on. The middle Bollinger Band is going to be approaching that level. It will take a couple more days to get there, as that's at 138.51. And we've been holding this middle Bollinger Band for over 3 months, and we've only even tested it one time, actually touching it back the first day of 2017. So the bulls are still in full control, but the candlesticks on Thursday and Friday are indicating that some short-term consolidation is likely. We had a little bit of an upper wake-up profit taking, not significant, so we are going to have to be watching the daily middle Bollinger Band, and that's pretty much the case for the S&P 500 and any other bulls that have been in a really strong run in 2017. As long as their middle Bollinger Band holds, the party continues for the bulls, and if not, it will be signal number one to start looking for some more consolidation. So Facebook hit new all-time highs both Thursday and Friday, but the high of the day was at the open both of those days, and it too had a weak close down near the low of the day. So the level on Facebook that I'm watching is the low of same thing, consolidation earlier in the week, 138.52, 138.49. So 2 days in a row, right at that same level. And if that level breaks, then we look to the middle Bollinger Band, because we are still fairly significantly above that middle Bollinger Band. And same thing, we haven't tested it since the first couple days in 2017. So if we break 138.49, we will be looking to the daily middle Bollinger Band to be tested. So again, not any major signs of bearish action, just something to be paying attention to. The week close has momentum favoring the bears on both Apple and Facebook as we head into next week. But the weekly time frame, no bearish reversal candlesticks, not even a significant upper wake of profit taking. So the weekly chart's still showing all bulls, but the both daily charts are showing us that we could be in for some short-term consolidation, and it's all going to be about whether or not the higher low pattern on the daily time frame can hold, as to whether or not it's just going to be a day or two of consolidation, or if those levels break, we'll be looking for more prolonged consolidation, which certainly would not be surprising after how bullish we have been over the past, what feels like forever, but it's really been a couple months. So thanks for tuning in. Hope you have a great rest of your weekend, and we'll see you on Monday.